Hello?
Hello? Why isn't Bitcoin making new all-time highs, huh? I thought you said it was going to the moon, or whatever you said. It's just sitting there at $69,000, and the gold you told me to sell, yeah, that's just crossed 5,000. What the
I've been hearing this question a lot this week, and unfortunately, I have the answer. It's just one word: the Fed. They haven't moved. Well, technically that's 5 words, but you still get the point. January 29th, Jerome Powell says to camera, we do not need to be in a hurry to adjust our policy stance. I guess that means they're frozen. And when the Fed freezes, Bitcoin freezes, because Bitcoin doesn't really trade on retail vibes. Well, maybe it trades on vibe-coded vibes using OpenClaw, but that's another discussion. Well, that and liquidity. And liquidity right now is pretty much dried up. But gold, on the other hand, gold just hit $5,000. And that gap between what gold is doing and what Bitcoin is doing is the whole story today. Emotions. This is Beyond Bitcoin. Let's go. Have you ever been so confused about something that you spend an entire week just scrolling, reading, watching, trying to figure it out, and then you finally land on the answer, and it's so obvious, and you feel like the answer was just laughing at you the whole time? Like it was just sitting there waiting, like it was having a coffee, like it was comfortable? Anyway, that's how I felt researching this episode. Here's what I came up with. First, Bitcoin and the Fed, the perfect 90s sitcom couple. When the Fed freezes, Bitcoin freezes. That may just be a theory I cooked up before recording this, but it's a theory that has popped up 83% of all 12-month periods since Bitcoin existed. So, I mean, come on, there's a correlation there, right? Second, gold is at $5,000 an ounce. What the hell is happening? I'll tell you. Central banks have been buying gold every single month since 2022. 1,000 tons a year, 3 years running. They must be in it for the tech, right? No, they're doing it because in 2022, the U.S. sanctioned Russia's dollar reserves overnight. $300 billion seized. And every central bank on earth woke up after that hangover and asked, what can't be frozen and what do we know how to deal with already? Ah, yes, gold. But if you look real careful and you also make Bitcoin content, you see that that's a Bitcoin argument wearing different pants. Third, the Strategic Bitcoin Reserve, a saga that has lasted longer than Star Trek iterations. 1 year ago, today, Trump signed the executive order, and it's still been sitting on his desk collecting dust. The U.S. government allegedly holds 380,000 Bitcoin. They haven't sold a sat, and that's probably because they spoke to the folks at the Bitcoin Way. By the end of this video, you'll understand that Bitcoin isn't frozen because something is wrong. Bitcoin is frozen because the thing that it moves with hasn't moved yet. And when it does, gold will look like an insignificant speck on the heel of Michael Saylor's running shoes. Let's start with the Fed because this is the piece that most people skip past. They land on price. They land on ETF flows. They land on on-chain data and miss the thing sitting right at the center of the argument. Bitcoin tracks global M2 money supply, total global liquidity, 83% of the time in any given 12-month window. Ledn and Sam Callahan published this research. More than gold, more than stocks, more than any other major asset class. Bitcoin follows the money, literally. So the single most important thing said about Bitcoin in January 2025 didn't come from a Bitcoin conference. It didn't come from Saylor, and it didn't come from X. It came from Jerome Powell, reading from a prepared statement, like I am right now, into a camera.
That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment.
We do not need to be in a hurry, he said. The Fed funds rate has been at 4.25% to 4.5% since December 2024. 3 straight meetings. No move. That means the global liquidity environment is tight. Not collapsing, it's just tight. The Fed isn't adding fuel to the money supply, it's parked. And when the money supply is parked, Bitcoin parks with it.
So I think liquidity is a really big variable, and I think that Bitcoin is more correlated with liquidity than most other assets.
And so how much of a part do you think that's playing in this drawdown now? Because I would say 2025 is probably, in the time I've been in Bitcoin, the year that almost no one's been right on Bitcoin. Like, I don't think it's gone up nearly as much as people thought. There was a lot of calls for this being like the cycles being over. Potentially they still are. But how do you like take this in? Like, why do you think Bitcoin's crashing now?
So I think it's actually the more interesting factor is why it's been flat for so long, because the crash itself, like even in the 2017 bull run, that was a fairly smooth and kind of parabolic bull run, but it still had multiple sharp 30% corrections along the way, like several.
Yeah.
You noticed Alden says more correlated with liquidity than most other assets. When global liquidity expands, Bitcoin absorbs a portion of it. When it contracts or parks, Bitcoin follows. Right now, it's parked. But here's what's not parked: the conditions that will force the Fed to eventually move. $36 trillion in national debt, $1.9 trillion deficit in 2026, interest payments alone. That's $1 trillion a year, tripled since 2021. The CAPE ratio on U.S. equities, 39.8, highest since the dot-com crash. The Fed can hold here for now, but the math only works so long before the pressure to ease becomes unavoidable. The deficit is structural. The debt service is structural. And every time the liquidity environment shifts in 2019 or 2020 or 2023, Bitcoin shifted with it, usually with a lag, usually bigger than expected. The story isn't Bitcoin is broken. The story is the Fed is holding its breath. Bitcoin is holding it with them. And by the way, this episode is brought to you by sat123.com. And this is quite on theme for this episode. They offer solar power generators, satellite phones, and off-grid setups, so you don't need utility companies to keep you connected or keep you powered up. Go to sat123.com and use the promo code SIMPLY, that's SIMPLY, and you get 15% off your entire purchase. Stay sovereign, stay connected with sat123.com. As I mentioned, gold crossed $5,000 an ounce in 2026, first time in history, up 65% in 2025. That's the best year for gold since 1979. JP Morgan is targeting 6,300 by the end of the year. Now I want to go on record right now because this is a recording, so I am going on record. This is not a gold story. Central banks bought more than 1,000 tons of gold per year for 3 straight years. Goldman Sachs estimates 60 tons a month right now, up from 17 a month before in 2022. 95% of central banks came up with a plan to increase gold holdings this year. China has been doing 14 consecutive months of buying. Why? Ask yourself what changed in 2022. The US froze Russia's dollar reserves. $300 billion seized overnight, you remember? And every central bank on earth woke up after that hangover and asked, what can't be frozen and what do we know how to deal with already? Yes, gold. But that's Bitcoin's argument, word for word. It's a hard asset, fixed supply, unlike gold, no counterparty, no subject to sovereign decree. Gold is running because central banks figured out the exit. They just stopped one stop short.
Analysts that are predicting such wildly higher gold prices as we almost shift the monetary anchor from treasuries as the primary reserve back to gold.
Yeah, it's not that I disagree with him. I think it's just a matter of probabilities or timelines. I mean, I would not have guessed that we'd be at 5,000 gold, roughly speaking, right now. I mean, as someone who's long it, I'm happy we are, but I would not have, if you asked me a year ago, do you think gold would be 5,000? I'd be like, well, no. So it can always surprise you the upside. I think one thing that's worth keeping in mind is that $10,000 gold is only a double from here. Meaning that even if that view is right, and it very well could be, it's a double, right? So you're taking on downside risk if it drops back down to 4,000, 3,000 an ounce.
Shift the monetary anchor from treasuries back to gold. She's not wrong. She just thinks it's a timing question. So do I. But here's what I'll add. If the monetary anchor is moving, it doesn't stop at gold. Gold is the first stop for central banks because they've dealt with it for centuries. It's familiar. It's politically defensible. But Bitcoin is the second stop, and it's been waiting. When you price equities in gold instead of dollars over the last 5 years, they're flat to negative. Real wealth didn't move. The dollar debased. Gold held the line. That's what gold does. It runs when the monetary system is under pressure, but it doesn't run harder than the money printed against it. Gold is the seatbelt. Bitcoin is the parachute. Ooh.
Bitcoin is certainly at least digital gold. It's going to eat gold. It's got all of the great attributes of gold, and it's got none of the defects of gold. If you could teleport gold from New York to Tokyo in a few minutes, people would like it. It's going to divert capital from risk assets and risk ETFs like SPY And you can see that these ETFs are doing that. It's going to be incorporated into a lot of funds like the BlackRock Global Opportunities Fund or the Strategic Income Opportunities Fund. And so as it's an asset class. As it goes into other funds, it's going to become structural.
All the attributes, none of the defects. Gold can't teleport. Bitcoin can. Gold custody takes armored trucks and vaults. Bitcoin custody is a hardware wallet the size of a thumb drive. Gold supply grows every year. Miners dig more. Bitcoin supply is fixed at 21 million forever. Bitcoin is a $2 trillion market cap in a $29 trillion room. The capital that proved the thesis in gold will eventually look for the asymmetric version of the same trade. Bitcoin is that asymmetric version. The central banks already confirmed the thesis. They just haven't made the second stop yet, as I mentioned. Which brings me to the Bitcoin way. If this thesis is landing for you, that holding your own hard asset outside of the system that can freeze them overnight is the right move, then the bitcoinway.com is the next step. Their team walks you through complete Bitcoin self-custody, not a YouTube tutorial, a real free 30-minute consultation. If you go to the bitcoinway.com/beyondbitcoin, meaning you mention us, you're watching the show, you get a free 30-minute consultation. They'll teach you about hardware wallets, setting up your own node, full verification, and total sovereignty over your stack. It's completely free. So go to the bitcoinway.com/beyondbitcoin. That's the bitcoinway.com/beyondbitcoin for your free 30-minute consultation. Now let's talk about the Strategic Bitcoin Reserve. 1 year ago today, March 6, 2025, President Trump signed the executive order. It's been sitting on his desk. David Sachs posted it. Trump called it virtual Fort Knox for digital gold. And the Bitcoin community had its, revelatory moment. But today, that reserve still doesn't legally exist. The U.S. government allegedly holds 328,372 Bitcoin seized in criminal proceedings from Silk Road and the Bitfinex hack. The executive order says, hold it, secure it, call it a reserve. But the Treasury says they need Congress to codify it. Now, Congress has introduced 3 bills. The Bitcoin Act, which is to buy 1 million Bitcoin over the next 5 years. The Bitcoin for America Act, which seems like the same thing with a flag on it. And HR 2112, which is to codify the order. All 3 are sitting in committee.
So sovereignty didn't really show up. People were talking about the Strategic Bitcoin Reserve a lot last year. I was on record saying I'm not going to, expect that really. And then the other side is retail didn't really show up. And instead, the only real players this time were kind of in the middle, the corporate institutional side, kind of higher net worth retail that have a brokerage account, and the ETFs opened up to them, made it easier. But not really like a deluge of people buying Bitcoin, taking self-custody of it.
328,000 Bitcoins sitting in U.S. government wallets. At today's price, that's $22 billion. And they are actively choosing not to sell it. That's not a coincidence. That's a position, an allegedly excellent one. The paperwork isn't done and the reserve isn't official, but the Bitcoin is there and it isn't moving, right? It is there, right? Every country watching this is running the same calculation central banks ran about gold in 2022. If the US holds it and won't sell it, what do they know that we should know? The reserve order is stalled. The Bitcoin is not. So the original question, why isn't Bitcoin at all-time highs? The Fed is frozen. Global liquidity. The thing Bitcoin tracks 83% of the time is parked. No expansion. No new fuel. So Bitcoin waits. Gold already ran. Central banks figured out the hard asset thesis. They moved while the Fed was frozen. Bought the exit that doesn't need permission. And in doing so, confirmed the thesis Bitcoin has been making for 15 years. The reserve is technically incomplete. The sovereign catalyst that was supposed to accelerate global momentum is still winding through some kind of committee. Fine. But 328,000 Bitcoins sit in US government wallets, allegedly. Take all 3 and the question changes entirely. It isn't, why isn't Bitcoin at all-time highs? It's, what happens when any of these shift? If the Fed cuts, liquidity expands, and Bitcoin follows the M2 the way it has in every prior cycle with a lag, and bigger than expected. If the reserve gets codified, that's a signal. Other nations run the calculation Lynn Alden has already run out loud. And the capital sitting in gold at 5,000 starts asking where the asymmetric version of this trade is. $2 trillion asset in a $29 trillion room. Remember? Fixed supply, no counterparty. These aren't predictions. They're just what the thesis says. And same thesis central banks already confirmed with gold. The same thesis the US government confirmed by not selling 380,000 Bitcoin. Bitcoin is at 69,000 not because something broke. Bitcoin is at 69,000 because the Fed hasn't moved yet. It's frozen. And frozen means it's coiled. Now I want to stop right here and give a shout out to ClubOrange.org. That's formerly the Orange Pill app. This is the premier app if you want to connect with Bitcoiners in your local proximity. You can have conversations about Bitcoin and macroeconomics, or you could just go grab a coffee and talk Bitcoin with someone near you. You can meet a new friend. So go to cluborange.org right now, sign up on the app, and you can even reach out to me there. I'm at Oshins, O-S-H-I-N-S. I read all my DMs and I respond accordingly. I'll see you there. Here's what I keep coming back to. The Fed says we're not in a hurry, and they mean it. The economy is holding, inflation is sticky, but it's manageable at the moment, and there's no cuts, right? But not in a hurry at the macro level looks like $36 trillion in debt and $1 trillion a year in interest. You can hold rates for a while, but you can't hold the math. And when the math wins, when the Fed has to move because the alternative is worse, the assets best position aren't the ones waiting for a bill to pass. They're the ones already mined, already in wallets, already running on fixed schedule that doesn't need anyone's permission or anyone's hurry. The Fed is frozen, not forever though, just for now. So study Bitcoin. Thank you so much for watching this video. If you like what you see and you want to see more, make sure you hit that like button below, or you can subscribe to the Simply Bitcoin channel for more content like this. We're coming out with it every single day of the week. Also, do not forget to hit that notification bell or leave us a comment, whatever you want to do. If you want to reach out to me directly, I'm Run Dance Bitcoin on X. Other than that, I'm Oshins. This is Beyond Bitcoin. Until next time.